Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is the earnings conversation. Our focus will be on Syngene's Q1 numbers that have come in better than estimates, and in fact the company has also maintained its FY26 guidance as well for the fiscal year, and also the margin guidance when it comes to both revenues and margins. They have both maintained on that front as well, while remaining mindful of the macroeconomic headwinds as well. Now Syngene, remember, had guided for the revenue growth to be in the early teens. That's been maintained, while margins to moderate from the current levels. Remember, the revenue for the quarter has increased by about 10.7% from last year for the company at 874 odd crore rupees. This is also higher than estimates of the street. Even EBITDA now stands at 206 odd crore rupees, and the EBITDA margins for the quarter have also expanded by 210 basis points from the year ago period to about 23.6 odd percent. Now remember, this is also higher than the estimates that largely the street was working with of about 22.5 odd percent. Although remember that the margin figure has narrowed down from the March quarter, and we've also seen that EBITDA and revenue figures have also lowered on a sequential basis as well. The net profit, however, for the company has increased by 14.5% last year to now 83.7 odd crore rupees. And the profit figure, although remember, also includes tax benefits from the transfer of gratuity funds to employees' gratuity trust as well. So we'll try and understand what has gone into this quarter and what lies ahead for the company going forward. Let's welcome the top management on the program with us, Mr. Peter Bains, the MD and the CEO of Syngene International. Warm welcome to you, sir, and thank you so much for taking the time out. Congratulations for starting this Q1 note on a strong one. And I wanted to first understand from you, how have you assessed the overall earnings for you? Is it in line with your own expectations? And of course, this is the beginning of FY26. So what lies ahead for the company?
Thank you, and good morning, Sakshi. Yes, we're very pleased with the growth performance in the first quarter, which is very much in line with our expectations. As you've touched on, the growth in revenues from operations is around 11%, and that's been underpinned by a strong performance in our research services division. EBITDA has grown around 19%, and the margin is at the mid-20s, very consistent with the guidance we've given. And PAT is up, nearly 60%, which is above the guidance that we've given. And as you've touched on, there is a one-off there related to the gratuity fund adjustment. So, that's going to be non-recurring. But overall, our start is very positive, and it provides the basis for our confidence in holding our full year guidance. It sets us up well, I think, for the rest of the year.
Okay. You've also mentioned that the growth momentum was also largely driven by the conversion of pilot projects to even long-term contracts in the research services business. Could you help us a little bit understand as to how is this poised to grow forward from here? What kind of growth can it contribute to your top line going forward, sir?
Sure. So we've seen in the last few quarters, an uptick in the number of pilot studies, and some of those, have been coming out of China as companies look to rebalance their exposure to China. And, that has certainly been an element of our growth, and we've seen a very high conversion rates. These pilots come in, generally, the companies will give pilots to one or two select companies in India, and they'll use that to assess capabilities, quality, service deliveries, and so forth, and then choose who to convert the pilot into a program, and then those programs can build and grow. And we've seen, a good flow of pilot studies coming in, and we've had a high conversion rate, and that's been a part of the underpinning of our research services. I do think it's important to say that that's just a part of the input to our research services. We have a wide, diversified research services base. And of course, we get multinational companies, mid-sized companies, and other companies coming in. And they come in, they visit us, they look at our facilities, our 2 million square feet of labs. They talk to the scientists amongst our 5,500 strong scientific team who may be working with them. And they don't go with a pilot. They come straight in, with a program, and then we can look to build those programs. So across our research services base, we've seen good momentum this quarter, and we have I think, good visibility of a pipeline of to sustain the kind of growth levels that we've seen.
Okay. Mr. Bains, could you help us understand a little bit on the exposure that you have to medium and small biotech firms? It used to be about 15 to 20%. Is it still that? Are there still any revenue growth pressures that you're facing on that front? And how long is it likely to continue?
So, and I think if you look at the macro situation, the funding for biotechs has not yet stabilized, nor has it returned to the sort of pre-pandemic level. So there remains a bit of uncertainty there, and we're navigating that. We are seeing biotechs come into Syngene. It isn't that it's dried up completely. We're seeing them, and of course, with our very diversified platform, we're seeing, as we've described, people coming in with pilots and companies coming in, coming in to look at us and picking up programs from there. So we're confident that we're in a good position to navigate, the biotech funding, and we are very confident that the business that we're looking at through pilots and through other avenues coming into us will sustain the kind of growth levels that we've seen. And that underpins the confidence for the full year guidance.
Okay. So your biologics manufacturing unit, you've said, has begun its operations at the Unit 3 in Bengaluru. Could you help us understand by when do you see meaningful contributions starting to come in from this one? What is the peak potential that we can expect here?
Sure. So, I mean, the key milestone for us is that we're now operational in the Unit 3 in Bengaluru, and that's been, a clinical supply to a customer. And we're looking forward to operational activity across the full facility in the second half of the year. So that will begin to kick in. It'll be a ramp up. It'll start as a relatively small contribution to overall revenue, but it'll build, and we have high confidence that it'll start to make a meaningful contribution in 27 and beyond. And we're also pleased with the progress we're making in our Bayview facility, our first foothold in the United States market, where preparations to begin operations there in the second half of the year are very much on track, and that again will start to contribute in the second half of the year and beyond into 27.
Okay. So you did say the preparations are underway to launch Bayview facility in the US later this year. What is the big expectation that you have? So which quarter are you looking at, and from when do you see, revenue contributions starting here?
Yep. So preparations are in full swing, and they're very much in line with our expectations and our previous guidance that we would begin to operationalize in the second half of this fiscal. That remains very much on track. It's a very versatile facility. We've got high level of interest and inquiries going on, and we'd look to see that convert into operationalization in the second half of the year. And then, very much like our Bengaluru facility, we'll then look to ramp up utilization through 26 and into 27.
Okay, got that. So you've also marked out that US FDA's GCP inspection of human pharmacology unit has completed with no observation. Any of your other units still remain with observations pending, where you may have to go for another round of inspection? And what's the status?
No, all ongoing, national regulatory audits are complete. Of course, we have an ongoing, audit activity with our customers, but very pleased to see that the FDA inspection of our human pharmacology unit resulted in a no observations output. And as we've also mentioned, in our biologics facility in Bengaluru, we got an EIR report with voluntary action inspection, so all clear to move forward on that. And these, I think, reinforce the wider lens of Syngene's very strong, historical position in terms of quality of our facility. So it's good to see that being maintained at the very highest level.
Okay. Sir, there used to be some sort of an uncertainty even on your animal health CDMO vertical. What is the current situation and how is the outlook looking like?
So, I mean, this relates to a post-launch adjustment in offtake, and it's very typical that in a launch period, stocks will build up. I mean, this is a 10-year collaboration here, and in the first 2.5 years, there's naturally a build-up of pipeline for the launch, and then there's very naturally an adjustment. That adjustment has been baked into our numbers and is proceeding very much as we'd expected. So it's, again, that's an element of our confidence in maintaining the full year guidance.
Okay. Help me understand a little bit on, sir, how the in the US, a lot of pharma companies had been facing this challenge due to the risk of additional measures of drug pricing. How is the current situation panning out? And with respect to then overhang on the tariffs on pharma, how are you really looking at scenario developing there?
So there remain uncertainties, and in the wider macro lens on macroeconomics and geopolitics, of course, there are, remaining uncertainties, and everyone's watching to see where they land. For Syngene, we of course are looking to navigate that and are confident of our ability to do so. Especially with the full integrated service platform that we have. It's worth remembering that Syngene is a service company and it's not a product company. We provide services. So the tariff position, which relates to products, really doesn't have a material effect on Syngene. Of course, we're watching everything and to ensure that we navigate optimally. I think it's also sort of worth taking the lens back and understanding that the CRDMO market is a very big market. Globally, if you include clinical trials, it's a $250 billion market. And, expectations are that will continue to grow at a high single-digit rate. So the market opportunity ahead of Syngene is very, very significant, and that's what we're focused on, really. Of course, we're monitoring the situation on the macro movements, but are confident of our ability to navigate through that against that wide market opportunity.
Okay. Just in the end, if you could help expound on your guidance, which you've maintained on both revenue and margins front. What will help you probably revise this guidance upward? What will be that one or two aspects that you could mention, sir?
So, I think the guidance that we've given, was mid-single-digit revenues on reported, but underlying in the teens, and we're holding to that. EBITDA at 25%, and we're holding to that. And on PAT, we'd said that there, might be a degrowth there. Now, the first quarter's come in very well. It's a very positive first quarter, and we'll look to see where we are at the second quarter before making any comments on the guidance framework that we're holding very confidently to on the basis of the first quarter.
All right. Okay, Mr. Bains, thank you so much for your time explaining to us and our viewers what has gone into this earnings, and all the best to you for the upcoming quarters as well. I will see you around on the other quarterlies as well. Thank you so much for your time, sir.
Thank you.
All right, viewers, we'll wrap it up on that note. That was the top management of Syngene International explaining to us the highlights of the quarter and what can be expected going forward from here. I hope this has given you enough and more insights to munch on as well. Do stay tuned on to Business Today Television. We'll continue to get you such fascinating insights and, of course, kind of important updates that top managements are giving us within the earnings of Q1 FY26, and of course market coverage that continues on the other side. Stay tuned.
If you like the video, do like, comment, share and subscribe.